What's up, you guys? Michael Elefante here. With everything going on in 2020, it has been a roller coaster of a year. With it being an election year and the coronavirus lingering around, the stock market is super unpredictable. So I'm here to tell you today to invest 100% of your money in Bitcoin and nothing else. Just kidding. I want to talk to you guys about an investment strategy that I have taken, and it has been awesome, and we've seen tremendous returns. And if you guys have seen some of these videos I've done in the past, typically once a month I'll do what's called a cash flow report, and I'll tell you full transparency the amount of money that we are making from these investments, both from a cash flow standpoint and growing our net worth long term. So if you hang around to the end, I'm going to disclose all of these numbers, and I hope you appreciate the transparency I provide, and I appreciate you smashing the like button below for the almighty YouTube gods. I really do appreciate it in all seriousness. If you guys are able to subscribe and get value from this content, that's great, and I hope to see you guys back for future videos. All right, so let's get into it. I'm going to tell you guys exactly how much money that we made from these 3 investments during the month of October in 2020. So we just closed on our 3rd short-term rental property that we list on Airbnb. We have 2 properties in Nashville, one that's on East Nashville, a little bit larger property, and then the other one is a little bit smaller, little townhouse, but you can walk to all of the honky tonks and all the action and live music on Lower Broadway in downtown Nashville. The 3rd property is something that we just closed on. We actually flipped the house, renovated it. It's in the mountains. Awesome, awesome investment. And this is located in Gatlinburg, Tennessee, and this is going to be our cash cow moving forward. So I'm going to walk you guys through exactly how we make money doing this. So hopefully you can gain a better understanding and maybe do it for yourself here in the near future. Now, October was definitely a different month for us, so our numbers are a little bit skewed, and let me explain why. For our larger house in Nashville, we have this big, beautiful butterfly mural. We also have an Instagram account for all of our properties. If you guys want to check it out, go to @LusoBnB or check out our website at lusobnb.com. I'll try to remember to put it in the description below. But with that, it's had a lot of traction with social media, and we actually had an influencer with over 2 million followers on Instagram and several hundred followers on YouTube, among other social media platforms. They reached out to us and see if we wanted to do a collaboration. We've never done this before, so I didn't know what to expect, but ultimately we provided the house for free at no cost to this influencer, and in turn she was able to help promote a giveaway that we did, which was 2 free nights in 2021, and we actually gained a few thousand followers from doing this. So we'll see what the actual financial benefit is, over the next several months. We don't really know yet. But overall, it was a good experience, and we enjoyed hosting their group. But it was an opportunity cost to us that was around $2,000 that we passed up in order to provide the house for free at no cost to this person. Secondly, we had an unusual expense, a repair expense, in our downtown location for Nashville. And this is completely just ignorance on my part, and I should have just called a plumber in the first place, but we had the kitchen sink was backing up a little bit. It has been over the past couple of months. I had fixed it a few times with Drano, but ultimately this time it was a little bit worse. What I did was a really bonehead move. I took a plunger and I was just plunging as hard as I could in the sink, and on like my 5th or 6th plunge, the whole sink just completely fell through. And I was just like, oh, I cannot believe I just did that. I don't know what's gonna happen. We have guests coming in 48 hours. We are totally screwed. I felt really bad. My wife just looked at me like I was a psycho. But I guess training at the gym really hard the past several weeks has really paid off, right? First, we're gonna break down the cash flow from each property. But guys, hang around till the end, because I'm gonna talk about all the benefits of owning rental properties and being invested in real estate long-term. Because I'm gonna show you truly how much money that we're earning in equity and in net worth, and how that grows over time. So stay tuned, because I'm going to go over all of these detailed down to the penny for you. All right, for our larger property, it is a 4-bedroom with 3 patios and a rooftop, sleeps up to 12 people, and that's located in East Nashville. We had only 4 bookings for the month of October, and our revenue from these bookings was $6,040.77. And remember, we gave a weekend away for free, and also had 1 weekend that was remained open that we didn't get filled, unfortunately. So revenue numbers in the future should be quite a bit higher than this, but we're still pretty happy with this number for the most part. Now, all of our expenses, mortgage, operating costs, all that good stuff, added up to a total of $4,982 for this month. Now, these expenses were a little bit higher than usual, but again, since we had the influencer come in, we wanted to decorate and spend some money, so we spent a few $100s making sure it was nice and Instagrammable, if you will. So all you have to do to get the cash flow is subtract the expenses from the overall revenue. So we take those two numbers and we get $1,058.77. And again, with everything that went on this month, we will gladly take a net profit and a take-home, pre-tax cash flow of over $1,000 for this property. Now, the second property is a smaller property. It's located downtown Nashville, the one that I broke the sink with the plunger again because I'm super strong. We had 4 total bookings for this property as well during the month of October. Now this property, since competition is much higher in downtown Nashville, is still struggling a little bit from a price per night perspective just because the travel has not returned to normal yet. So we know our cash flow is not going to be great until probably spring of next year, but we're still profitable every single month. So for this month, we had gross revenue was at $4,505.17, and our total expenses added up to a whopping $4,149.51, and this is way higher than usual. We actually did a deep clean with our new cleaners, so that was an additional expense, and then again, we spent over $550 repairing the sink that I broke. So our net cash flow is actually the lowest it's been since we acquired this property last spring with a measly $355.66. All right, let's talk about the most exciting investment we've ever made, and this is the Mountain House located in Gatlinburg, Tennessee. This was actually a fix and flip and rent out on Airbnb, and it has been absolutely insane. If you guys have seen a couple of my recent videos, I showed you the before and after photos, everything that we changed about the property, brought it from the 1990s to the 21st century, looks super cool. It blends rustic with modern finishes, and it's just a tremendous success so far. We've had over $32,000 worth of bookings just in the past 15 days, spanning from October 16th to January 5th. So I just did a recent video a couple videos ago disclosing all of the numbers and how this property is going to bring us a cash flow around $80,000 per year. That's just in cash flow. And I go over the numbers on equity gain and appreciation and things like that. So guys, I definitely recommend, if you're new to real estate investing, go check both of those videos out. Hopefully it provides a lot of value and answers a lot of your questions. I'll drop both of the links to those videos in the description below. And we had 5 total bookings in October. Remember, we were only listed for half the month, or not even half the month. And we actually gave away 2 stays, one of which was basically free to some friends the first weekend we were listed. And the next we gave probably at like a 75% discount to some other friends. So this cash flow number could have been even bigger, which is crazy to think about. So in October, we brought in $6,066.89 in revenue. Now, just so you know, during normal pricing, if we had been listed already, and October is one of the busiest months of the year in this area, we probably would have seen $12,000 to $14,000 in revenue for the month. Now our expenses, on the other hand, were actually pretty low because we closed on the house in mid-September, so our first mortgage payment actually wasn't until November 1st. So our total expenses were only $1,557.95, which brings us to a net cash flow for October to be $4,508.94. So to get our net cash flow from all 3 of these investments for the month, we just add these 3 numbers up and we get $5,923.37. This is actually below our expectations. It may seem hard to believe, but these properties can actually produce well over $10,000 a month combined in cash flow. All right, for those of you that stuck around, I'm gonna dive into what makes investing in real estate extremely special and will make you extremely wealthy over the long term. So if you're not familiar, each month, a portion of our expenses is actually a mortgage cost. In that mortgage, a little bit is paid in principal and the rest is paid in interest. Now, over the course of that 30-year term that we are obligated to pay the loan back to the bank, each month principal actually creeps up a little bit, and then each month interest goes down. So each month we're actually making more money as is in the form of equity in the property. Now what's really cool about this is the renters are actually paying the house off for us. So the renters are making you as the investor rich. Now for the month of October, the larger property in Nashville, the principal paydown was $534.72. And the smaller property downtown, the total amount paid in principal was $491.40. Now for the Mountain House, since our mortgage didn't start till November 1st, there was actually no money paid in principal because there was no mortgage payment in the month of October. So if you add those 2 numbers up, we have $1,026.12 of equity that we earned in the month of October. Now for appreciation. Now typically, I only account for appreciation as icing on the cake because it's technically an unrealized gain until you refinance the property or sell it down the road. But typically, investing in real estate is a hedge against inflation. So as the value of the dollar goes down, the value of your real estate goes up. So it's a hedge against the devaluation of the US dollar. So for appreciation, I typically ballpark around 3% when I'm evaluating investment properties, when in some cases this could be far greater than that, but I invest for the cash flow and the equity in the property, not necessarily appreciation over the short term. Over the long term, yes, you're gonna reap the benefits of appreciation. So just remember that appreciation is an unrealized gain technically until, again, you refinance or sell down the road. But we're gonna account for it here because it is important to know this information. When you are investing in real estate, you are actually growing your net worth over time, so you do need to account for appreciation. So for the larger house in Nashville, we purchased around 12 months ago and we bought it at $495,000. So at a 3% appreciation growth rate year over year, that first year equates to around $1,237.50 per month. Now for the smaller Nashville house, we purchased in May, and that purchase price was at $430,000, and a 3% growth in year one equates to about $1,075 per month. Now, if you guys watched the video I did on the mountain house and broke down all of the numbers on this investment, I talked about one thing that's called forced appreciation versus just year-over-year appreciation growth over the long term. And forced appreciation is when you renovate a house, add new appliances, add bedrooms, add bathrooms, things that basically force the value of the house to go up. So technically, we probably gained at least 50 grand in equity from forced appreciation in that house, but I'm not gonna account for that here. But what I will account for is the house after repair value, or ARV as you'll hear in the real estate world, is right around $650,000, probably at a bare minimum. So I'm gonna base the 3% growth on that number. So 3% of 650K equates to about $1,625 per month during the first 12 months owning the property. So if you add all three of those up, the total, again, unrealized gain from appreciation adds up to $3,937.50 for the month of October. So now let's talk about the net gain from owning these three properties, because it's not just the cash flow, right? That's gonna help set us financially free, the money coming in each month. But more importantly, what's gonna help us grow wealth and grow our net worth long term is what we just talked about, which is principal pay down and appreciation. So let's add all these numbers up. Our total cash flow was $5,923.37. Our total principal pay down was $1,026.12. The total unrealized gain from appreciation was $3,937.50. So our total net gain from owning these three properties was $10,886.99 just for the month of October alone. I hope you guys really do appreciate the transparency in the videos that I do. I hope it brings some value to you all. If it does, please don't forget to subscribe below. Please hit the like button if you found value in this particular video. So to recap, this is why investing in real estate, and more specifically short-term rentals, is so powerful. You get cash flow. It pays you every single month. You're not gonna get that with a 401k or traditionally investing in the stock market unless it's a high dividend, yield stock. You get principal pay down in the form of loan pay down, which the renters pay for you. You're gonna get rich slowly, gain equity in the property, and appreciation, not just a hedge against inflation, but if you're in a growing market, you're actually going to outpace inflation. And again, you get to keep 100% of that equity over the long term. Thanks again for watching, guys. Best of luck to y'all on your path to achieving financial freedom.